Hello traders, Gary Wagner here, just about 11:20 in Honolulu, 4:20 in New York. It is Wednesday, December 14th, 2016, and this is the Daily Report for Gold and Silver. Following an announcement by the Fed that they would in fact raise interest rates by 0.25% today, we did see some underlying weakness come into the gold market. Gold, which had been trading slightly higher, basically slightly lower up until that Fed announcement, then began to drift lower, but not substantially. Once the policies actually came out, and it was quickly seen that their policy included the potential for 3 interest rate hikes next year, 3 dots, rather than 2 rate hikes next year. That sent the markets into utter gyrations, with the US dollar gaining tremendous value, moving up over 8% on the day. Equities markets selling off at its low. Dow Jones Industrial Average was down about 150 points. I believe it closed down about 118 points. And the net result in the precious metals was a further decline in pricing. Gold selling off by 1.25%, off $14.50 at $1144.50. Now, the low today was $1140 even, and the high $1168. The most important thing that we want to look at, I believe, in today's lower pricing is this net change. Because if the market closed off by 1.25%, and we know that the dollar took away about 1% of value, there's a 0.25% that is due directly to selling in the market. So strong dollar took a lot of the value out, but selling actually added to that, and that's where we get this net result of $1144.50. As I said, down almost $15 on the day. Silver is a different story, off about 0.6% at 1687. The low today was 1680 and the high 1729. And as you can see, same dollar strength would have taken silver down 1 full percent. However, the fact that it closed, call it 0.7%, you had that final 0.3% due to buying in the silver market today. And that to me is very, very interesting, and something we definitely want to look at closely. Speaking about the dollar, here's the dollar up 1.06 at 102.13, and you can see it's up over a full percentage point, and therefore we're getting the distinctions in gold pricing and silver pricing, where we are seeing silver boosted up a little bit by buying, and gold adding to a dollar strength by selling. So traders, I do want to start today's show off by looking at standard candlestick chart. This is a daily chart, of course, with our major fib retracement that we have been plotting. And of course, that basically encompasses the entire year of range in terms of the lows that it hit. That's back at the beginning of the year. The highs that it hit, that of course is in June and then again in July. We in essence had a double top and the subsequent sell-off from that point. We initially looked for the potential for there to be some sort of supportive price point roughly at the 61% retracement level. That comes in at roughly 1272, 1270 in that area. We could see that for over a week it attempted to form some sort of a base here. Although it had traded with these lower lows, we were consistently closing around this particular price point, but at no time did we get any kind of an effective bounce. We got a couple of fake outs really, in which we would have the market come under pressure and then trade dramatically higher. We saw that here. We also saw that here. But at that point, we really determined that those markets needed to see more follow through before taking any kind of an active position on. That being said, we have been flat this market as we've watched this market drop. We absolutely believed and still do that there was major chart damage inflicted roughly 4 or 5 trading days ago when this market broke substantially below 1270. It had a small update, and then of course today this dramatic sell-off trading to a new low that has not been seen since the market rose from these lows back at the beginning of the year of 1140. Now, my current target right now is anywhere between 75 and 78% in terms of the retracement, and 75% comes in at around 1128. Of course, this last round of selling has been a little bit gold selling, a lot dollar strength. We had the dollar now move back above 102. The announcement today that the Federal Reserve will raise rates by 0.25%, 25 basis points, did not take the market by surprise. And in fact, most analysts, including myself, believe that that rate hike not only was anticipated, but factored into current pricing. What was not anticipated is this new, more hawkish tone that the Fed put out, in which they said that the dots, meaning how many interest rate hikes they are shooting for next year, is 3 as opposed to 2. Now, Yellen came out afterwards in her question and answer period trying to kind of put a little bit of buffer onto that statement. And in essence, she said a couple of things that kind of smoothed that out. And one of the things that she said is that Fed policy remains accommodative and that the policy is not on a preset course. In other words, it is data dependent as it's always been. However, even those statements did not curtail the equities markets from dropping dramatically and gold and silver prices dropping dramatically. Now, here's what we noted of interest. When we look at the dollar itself was up over a full percentage point. Gold is trading down now about 1.2%. So that additional 2% is a small amount of selling in the market, and that is quite different than what we're currently seeing in silver. And so traders, to illustrate that point, I have brought up a basic candlestick chart. This is a daily silver chart. We have the same kind of a fib retracement. We're going from the lows that it hit this year up to the highs, although on these highs I'm using these actual highs as opposed to this particular high because I felt that that was overdone. We do tend to have this market because of the less liquidity in the market and because of the large players that move the market around. We get these overblown highs and lows that I don't really think are a true indication of market pricing, at least in its totality. That being said, though, the key distinction that we have really seen between silver and gold pricing is the fact that unlike gold, which tested and then broke below a 61% retracement of the yearly range, we had silver actually form a base and then pop off of that base to actually move higher. We have seen and noted that there's been a clear separation and a clear distinction between gold pricing and silver pricing. Now, one of the possible explanations for that is that we have this industrial component to silver in terms of utilization that is not as widely used in terms of an industrial metal, gold that is, than silver. And so therefore it's getting that boost from a higher equities markets. However, I really genuinely think that there's more at play than just that. However, that being said, I told you that once the dust settled, we would start to talk about our year-end and next year strategy. And I want to begin to kind of point out what I'm looking at. I think between now and inauguration, we could see a continuation of the same kind of dynamics at play in the market. In other words, a stronger dollar, pressure on the precious metals, gold trading under pressure. I think that it will trade to the 75 to 78% retracement level. However, I'm not convinced that silver will break below the 61% retracement. So there are a couple of different ways we can play this. You can just initiate a short position in gold. You could just initiate a long position in silver. However, the long position in silver, I would hold off for at least until we trade back to the bottom of this channel. At the bottom of this channel, any kind of a bounce would signal a good entry, unless we get the market clearly breaking above the 28-day moving average, and that's why I've got this in this particular chart. That would also signal a buy. There is yet another way or another strategy that you can apply, and that would be where you sold gold and bought silver. In other words, if in fact we are looking for a widening between the price of gold and silver, if we think that, or narrowing, I should say, if we think that silver prices are coming up and gold prices are going to remain steady and under pressure, that means that over time, in terms of the gold-silver ratio, you're going to see a pretty dynamic change, a continuation of what we have been seeing. And so that might be the most prudent play. Now, realize that I am looking for this market to bottom out on a fundamental basis. What we could look for And what we want to look to see how this all plays out is following the inauguration of President-elect Trump, the optimism which is based on the idea that his policies will bring change, upon the idea that he's able to implement these strategies. Once the inauguration is complete, you've got to take pen to paper, and now he's going to be judged on the implementation of those policies and the outcome of those policies rather than a rosy optimism on completely untested talk, so to speak. And so we could easily see something occur that would really change the dynamics in the market sentiment. We could see gold spike up. Silver would spike up along with it. I would think that silver would go up more than gold, possibly, because that's what we have seen. However, that could change in a moment's notice. But the key is I think the play of being short gold, long silver is a play that you definitely need to unwind as you get close to Inauguration Day. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.